Chain Drug Review and Mass Market Retailers Video Forum. Brought to you by the Emerson Group.
Hello, everyone. I'm Jeffrey Wolt, Editor-in-Chief of Chain Drug Review and Mass Market Retailers. Welcome to our video forum. Today, we're thrilled to have as our guest Todd Huseby, a partner in the consulting firm Kearney and leader of its U.S. consumer healthcare practice. Todd, welcome back.
Jeff, pleasure to be with you.
I want to ask you, obviously, about healthcare, which is your area of expertise, but maybe first I could get a sense from you of how Kearney sees the economic picture shaping up in 2023.
Yeah, no, great backdrop question. In late 2022, we did some presentations on the economy for 2023, and in that context, how CEOs and executive teams were planning projects for 2023 based on what they would say publicly and what we would see in our own pipeline. In late 2022, there was a lot of indecision for which way would the economy go. Generally, skewing pessimistic, but for 2023, but uncertainty in terms of when and how deep recessions would come. I should add from that, I think most recently coming out of like Davos last week, I detected a little more optimism, maybe ungrounded, but a little more optimism from CEOs. Regardless, I'll tell you a little bit about the projects that they were thinking for the year, if that's of interest.
Absolutely.
Yeah, okay. So as they were looking at 2023, actually counterintuitively, the projects that get the most mentions in public comments are growth projects. Mm-hmm. So you're thinking, wow, there's indecision and all of that, but across the spectrum, growth actually gets cited the most frequently. I will tell you, I think that's in those public comments, I think that's probably a little bit overstated and maybe playing to the shareholders a bit, because I think while that is present in our pipeline, bigger in our pipeline are the kinds of things you might expect to see in an uncertain economy with efficiency, cost improvements, things of that sort. We also looked at it based on companies that were more profitable and less profitable. So above average profitability companies in the health and wellness space, so your core audience, they were looking generally at things that were more planning oriented. So, innovation pipelines, R&D, at that end of the spectrum, they were interested in things like ESG, but I should say half as frequently as they had mentioned it a year ago. On the less profitable side of companies below average, they were focused more on things like cost takeout, supplier strategies, which oftentimes would mean like sourcing and reducing cost, and reactive kinds of supply chain things, still working through the challenges of supply chain.
Okay, no, that is a great introduction. And now maybe we can narrow down a little bit and talk more specifically about healthcare. What trends do you see emerging at the moment?
Well, so I was at the JP Morgan conference a week ago and 2 weeks ago, excuse me. And so I think things coming out of there that are consistent with a lot of the trends. At that conference, oftentimes people are excited for an awful lot of M&A activity. There wasn't a lot of M&A activity. There were some rumors and discussions, and that M&A will be present. I don't want to say it won't be in 2023, but I think a trend will be less deal making than there was 2 years ago when we were at a peak. So more like last year. Maybe even less than last year. But other things beyond M&A that were interesting in healthcare, I think at that conference, a lot of things around artificial intelligence. And so that can be applied generally for a cost improvement lens. It's generally framed in the context of productivity improvement. So whether it's making doctors or pharmacies or just health plans more productive. So those were some trends. Of course, in biotech, there's awful lot of trends. We still can't It's not even just biotech, it's healthcare more broadly. The macro trend that's been true for many years continues to be true this year. In America, we generally can't afford the healthcare that we've got. So it's in that context, right, that the payers keep reducing reimbursements, forcing providers and pharmacies to seek out more and more ways of driving efficiency. And be happy to talk more about that.
Yeah, well, why don't you elaborate on that a little bit? I mean, efficiency is critical. And we spend so much on healthcare and we get substandard results.
Yeah.
I saw a report yesterday that apparently Costa Rica has a higher life expectancy than the United States and spends a heck of a lot less per capita than we do.
Yeah. I can't comment on Costa Rica specifically, but yeah, right. It's disappointing for all that we're spending. And I think we all know there's sort of, barbell situation, two groups of healthcare going on in our country, very unequal. For many of us, we're fortunate to have the best healthcare in the world and great access to the world's best doctors and healthcare. But for many, that's not true. And so we just struggle with these challenges. Net, it's all very expensive still, though, in what we're offering for a super convenient, high quality healthcare system with lots of innovation built into it. And I think, to be fair, we do subsidize in this country the world a bit through the drug innovation that we like to have coming out of our country. But look, I think as it relates to the chain drugstore audience, I think if we can't afford the healthcare that we've got, and we've got to be driving for efficiencies, then the things that matter as payers keep reducing year after year after year, the reimbursements, you're going to continue to see things like trying to increase the number of scripts per store in traditional brick and mortar retail. So that can either come through gaining share from other channels, hard to do, or by reducing stores, easier to do but not easy. And that doesn't happen in 1 year. That's a long-term trend.
But we're seeing it already.
We're seeing it already. I think we're going to continue to see it. We have to see it. And look, it's going to force new models. It already has forced new models. You and I are having this conversation today on the day where Amazon announced RX Pass. And I think that's a great example of new models that are coming through the pharmacy landscape in order to ultimately, reduce cost and efficiency. But it's going to, I'm not sure it's profitable for Amazon. I do think they can absorb it and afford it, and it'll lead them to, benefits in other parts of their business. But if you've invested in an expensive brick and mortar corner store with lots of labor in it, this doesn't make it any easier.
Mm-hmm. What can and should the brick and mortar guys do? I mean, we see movement by CVS and Walgreens, in particular by Walmart. How would you advise them to take those brick and mortar locations and turn them into more profitable operations than they are today?
Yeah, no, great question. So look, if the profitability in the traditional pharmacy, continues to fall, you got to make the rest of the location that you've got more productive. I think there's a bunch of different things you can do, but I don't pretend any of it is easy. So for example, if you're going to use the rest of the store, you probably have too many square feet still in that, 15,000 square foot prototypical box. So you have to look very carefully at every of the categories and make sure they're carrying their rent, so to speak. And I think this is why you see the growth of clinics, because you're generally finding someone else or some higher use of rent coming in to pay for that space, than less and less productive merchandising in that square footage. So I mean, that's one of the things, just for absorbing the cost you've got. But I think the retailers, where they exist and how they exist, there's a lot of things that are still advantages that they have that I hope they will tap into more and more and more. So for example, I think they're still, they got great brand names that mean a lot to consumers, especially in health and wellness. They couldn't be more convenient. So finding the right niches for how you're going to double down on convenience is one of the things that I think is an opportunity and an unmet need for consumers. But you got to be able to get there and do it faster than Amazon or Walmart can do it. Amazon's being super convenient these days. Frankly, Walmart, buy online, pick up in store, those kinds of solutions make it much more convenient. So to be, I'll say, highly personalized, highly relevant, highly digital, and convenient are the things that our traditional chain drug retail need to be able to do. Maybe I can say one more thing on the personalized part. When we've done surveys over the last few years, triggered when COVID started, one of the things we found, and it's persisted, interestingly in our data, is there's a pretty strong unmet need among especially middle-aged females who are looking for stronger relationship with their pharmacist and don't feel they have it. And that's exactly the kind of consumer generally in suburban America, close to a conveniently located chain drugstore, with whom I think you could over-index.
How important is the push into primary care that we see CVS and Walgreens making at this point, Walmart, others?
So strategically, obviously, it's very important to the companies as they describe being relevant and providing convenient care, even integrated care to customers. I think it depends on the lens you take, though, Jeff. I think if you think about it from the consumer vantage point, or patient vantage point, which is always important, they do seem to like integrated care made very convenient. So from that standpoint, strategically, I think it's an important move to be able to make that a seamless experience for more and more of their healthcare needs. If I look at it though from a financial point of view, and we talk about acquisitions, I'm a little more humble, I think, on the acquisition of all of those assets in order to provide returns to the shareholders. In a lot of cases, these are not yet entities that are generating strong income, and yet the valuations are pretty high. So I just think that you need to be careful on the acquisition side. So maybe to square the circle, I'd say I think partnerships make really good sense, and building ecosystems that way. I think you might even see it reversing and seeing in some cases, it depends on the situation, but you could see that the payers end up making the acquisitions. They're already buying a bunch of physician groups. They could be buying pharmacies too, and then they could be the ones forcing the integration. Yeah, I think there's a need for it.
Thanks for sharing your insights with us, Todd. Look forward to continuing the discussion with you next week.